Before embarking on a journey, you first need to know where you are going. You have to know your destination. So too with investing. Before we start learning about the fundamentals, we must ask ourselves, what is it that we want to accomplish and how are we going to accomplish it? What is the big picture? When all has been said and done, we want to be able to put together and execute a plan that will make us money consistently over time. And part of that plan involves putting together a low-risk, high-return portfolio of companies. To that effect, we are now going to talk about the different types of stocks and the various sectors they encompass. We are going to discuss the advantages and disadvantages of these stocks so that we can use the information to construct a well-balanced portfolio of businesses. There are two main categories of stocks. We have defensive stocks and cyclical stocks. There are other types of stocks in between, but these are the two main ones. Defensive stocks can be divided into three sectors, namely consumer staples, healthcare, and utilities. Cyclical stocks, on the other hand, can be broken down into four sectors: real estate, basic materials, finance, and energy. So let's look at each one individually, starting with defensive stocks. Defensive stocks. These are stocks of companies that sell products or services that are a necessity. For example, despite the condition of the economy, whether we're in a recession or a boom, consumers still have to buy toothpaste because we still have to brush your teeth. You still have to buy detergent to clean around the house. No matter the condition of the economy, you still have to buy medication, bath soap, groceries, etc. Because their performance is not dependent on the state of the economy, defensive stocks have consistent sales and profits, and therefore they are predictable, which is music to us as investors. These companies are for investors who prefer to have low volatility in their portfolios and are okay with receiving moderate returns of 5 to 10%. These stocks tend to do well during a recession. Why? Because when people anticipate a recession, they normally put their money in defensive stocks because they know that defensive stocks are a safe haven and will do well during a recession. As they pump money into these stocks, their price or value goes through the roof. And that is exactly when not to buy as investors. We do not buy defensive stocks during the hype of a recession when they are overvalued. During these times, we are actually the ones selling these stocks to buyers. We always do the opposite of what the masses are doing. But when a recession is over, people will tend to pull their money out of defensive stocks and start buying cyclical stocks which have higher growth rates and therefore higher returns. As money is pulled out of these stocks, the price or value drops to low levels, and that is when we start buying when they become undervalued. And I'll show you just a typical trend of a defensive stock. This is clicks, which is listed on the JSE. You can see that the price has been steadily going up over time. It's been very stable, and it's been held by this 20 simple moving average, which has been a very, very strong support. And even during the 2020 market crash, you can see that it only retraced slightly, recovered and carried on upwards. Only after the recession was over, when people were more optimistic and started putting money out of the defensive stocks and into other more profitable stocks, only then do you see a big drop in the price of the stock, all the way down to the 50 moving average on a monthly trend. I hope you guys are clear with this. Okay, now having spoken generally about the defensive stocks, let's look at the sectors now. We said it is divided into three sectors. We have consumer staples, healthcare, and utilities. Let's start with consumer staples. These companies sell products such as beverages, whether alcoholic or non-alcoholic. They sell household and personal products, food, and tobacco. In the US market, we have examples like Coca-Cola, Procter & Gamble, Walmart, Estée Lauder. In South Africa, we have Tiger Brands, British American Tobacco, Richmond, to name but a few of them. Now, these companies I've listed here, I have listed them as examples. I'm not necessarily saying they're great companies to invest in. You as an investor will have to do your own due diligence, do your own research to determine whether a company is a great business to invest in or not. I'm just listing them here as examples. You can either buy or invest in these companies individually, or you can buy the ETF, which is denoted XLP. ETF stands for Exchange Traded Funds. These are a group of companies put together and they track an index, but we'll talk about ETFs at a later stage. And you can see on the S&P 500 map, they are located over here. Moving on to healthcare, which is the second sector. These include drug manufacturers, suppliers, and distributors of medical equipment, biotechnology, medical care facilities, pharmaceuticals, and health information services. In the US market, we have examples like Johnson & Johnson, Pfizer, United Health, Abbott Laboratories. In South Africa, we have Aspen, Netcare, and Mediclinic, to name but a few. I like Johnson & Johnson and United Health for investment purposes. Now, again, you can either invest in these companies individually, or you can buy the ETF, which is XLV. And on the S&P 500 map of companies, it is located over this corner here. Now, moving on to the third sector is utilities. It is made up of businesses that supply water, electricity, and gas to consumers. Now, you guys know, whatever the case may be, whether the economy is doing well or not, we still need electricity, we will always need water, we will always need gas, okay? And examples of such companies in the US market is Duke Energy, Atmos, Sempra, NextEra, all right? And it is located over here in the S&P 500 map of companies. Now, having viewed these three sectors, I would not invest in the utilities sector because it is highly price competitive and it has low returns. So I won't invest in those. I will invest normally mainly in consumer staples and a little bit in the healthcare sector. Okay, now that we have spoken about and completed our analysis of defensive stocks, we now move over to cyclical stocks. These are stocks of companies that sell products or services that are considered a luxury, such as car manufacturers, airlines, banks, and restaurants. These companies tend to do well during good economic times because people can afford to spend on luxuries and hence they make big profits during good times. However, when the economy does poorly, they underperform as people cut back on their spending, and there, during those times, they can make big losses. They are more volatile compared to defensive stocks. These stocks are for investors who do not mind big swings in their portfolio for the potential of having higher gains. I hope you guys are clear with that one. And I'll show you one example, which is Visa, which I own. You can see that the trend is very choppy. It's not like the clicks trend, which was steady and going upwards. This one is very choppy. And you can see during the 2020 market crash, it really crashed down big time. And even when it recovered and reached all highs, it comes down, up, down, very choppy. So that's why with cyclical stocks, we buy them when they're at the bottom and then we sell them when they reach all-time highs. I hope you guys get that. And so, having seen how cyclical stocks are, let us now look at the four sectors under these cyclical stocks. We have four of them. We have finance, we have energy, we have basic materials, and then we have real estate. So let's start off with finance. These are companies that provide financial services to people and corporations. They include banks, insurance companies, credit providers, brokerage firms, lenders, real estate brokers, asset management, and businesses. that provide financial data and access to the stock exchange. In the US market, we have Visa, MasterCard, we have Berkshire Hathaway, we have JP Morgan Chase, SP Global, and BlackRock. In South Africa, we have Capitec Bank Limited, Investec, and JSE Limited. In the S&P 500 map of companies, they are located in this corner over here. Next is energy. These are oil and gas companies. It includes suppliers of oil and gas equipment and services and coal. In the US market, it's companies like Exxon, Chevron, Conoco. And you can see in the S&P 500 map of companies that are listed over here. And then we have basic materials. This sector is made up of companies engaged in the discovery, development, and processing of raw materials such as gold, oil, copper, and steel. It includes mining, metal, refining, chemical products, and pulp and paper products. In the US market, we have companies like Linde, Ecolab, Nuco, Dow. In South Africa, we have companies like BHP Group, Anglo, and Sappi. And on to the last sector is real estate. These include REITs, mortgage, and property management companies. REIT stands for Real Estate Investment Trust. These are companies that own and typically operate income-producing real estate or related assets. But more about that in later chapters of the lessons. US market, we have American Tower Corp, we have Prologis, we have Costa Group. And in South Africa, we have companies like Baldwin, Lighthouse Capital, Raven Property Group Limited. And they're located over here in the S&P 500 map of companies. Now, out of all these four sectors, the sector that I will invest in preferentially, my personal preference is finance. I will invest in real estate, I will invest in basic materials and energy because, again, they are price competitive and they are very cyclical and unpredictable. So I won't invest in those ones. Now, having spoken about the two extreme ends of the spectrum, we now shift our attention to the third type of stocks that are in between defensive and cyclical stocks. These are known as moderately cyclical stocks, and they encompass four sectors: technology, industrials, consumer discretionary, and communication services. These stocks make profits quite consistently because many of them are in the secular growth industries. And by secular, I mean long-term. Let's start with technology. The technology sector is the category of stocks relating to the research, development, or distribution of technologically based goods and services. These businesses are focused on the manufacturing of electronics, creation of software, computers, or products and services relating to information technology. In the US market, it's companies like Microsoft, Apple, Adobe, NVIDIA, Intel, Cisco. In South Africa, we have companies like Naspers, Prosus, and Allied. And you can see it is a very, very big sector in the S&P 500 map of companies. The next is communication services. Communication services such as social media companies, internet search firms, video game makers, telecom providers, and streaming media make up most of this sector. In the US, examples, Netflix, Meta, and Alphabet, AT&T, Walt Disney, to name but a few of them. And in South Africa, we have Vodacom, we have Telkom, we have MTN, and you can see they are over this side in the S&P 500 map of companies. And then we have consumer discretionary. These are businesses in the sector sell non-essential products and services that consumers may want but not necessarily need. These include cars, travel, entertainment, clothing, and sporting goods. In the US market, it's companies like Amazon, which I like a lot, Tesla, General Motors, Home Depot, Booking Holdings, we have Nike, we have McDonald's. In South Africa, we have MultiChoice, we have Foschini Group, we have Tohosan, we have City Lodge Hotels, to name but a few. And you can see in the S&P 500 map of companies, they are located over here. And then we have industrials. These are companies that produce or distribute machinery, equipment or supplies used in the manufacturing, construction, or defense industries. This sector also includes aerospace and defense firms, air transportation services, and logistics services. In the US market, examples are General Electric, Boeing, Lockheed Martin, which I owned previously, and 3M. We have Caterpillar as well. In the South African markets, we have Barlow World, we have PPC Limited, we have Impact, and we have Bell. And we see in the S&P 500 map of companies, it's located over here. Now, I'm not so keen on industrials because industrials are very capital intensive. They have all these machinery that they must service or replace, which eats away at profits. And if machinery and they're using so much capex, it eats away at profits, and therefore my returns would be much lower. But definitely, I would invest in technology, consumer discretionary, communication services. Those are my 3 favorite sectors, and I'm heavily invested in those ones. So this is the end of our lesson. I will see you guys on the next lesson. Goodbye.